I want to just mention one opportunity that you and we've loved this company for years. I mean, I've heard about this company, of course, for years because my mom has loved it for years. You've been following it for years, and I know invested in it for years. But we have a really in-depth piece on the website on 76research.com, available for free, by the way. So if nothing else, get the free stuff. And it's on a company called Digital Realty Trust. And it's kind of a different way of playing, if you would, some of this AI success and this technology success. Walk us through it so that people sort of understand. And by the way, I think we talked about it first when it was $105. And as I look at the market today, it's around 156. So that's a nice little upside in shares of Digital Realty for you.
Yeah, DLR. So, when we were first putting together 76 Research, we had our kind of pilot newsletter back about a year ago and published our first kind of newsletter to a small, group of
very small
subscribers.
Group of the
paying
inside crowd.
But we republished that after we launched, we republished that memo on the website. So if you go to 76research.com, you could scroll down either on the homepage or on the Explore page and find the link that says, I think it says sample stock research. And there we have sign up, and we have our digital realty memo that we published on June 22nd of last year, when I think the stock was close to $100 a share. Lately, it's getting a lot more attention lately. It's been doing pretty well lately. I mean, it's up, it's done well over the full year period. But I think what's happening there is the market's really coming around to the idea that, so the reason that this was a stock that was that had peaked at the end of 21 when interest rates were low, and then it kind of sold off with the REITs. And then what happened is a number of short sellers came out with a short thesis. Chanos, if you recall, there was this idea that Digital Realty as a big data center operator would lose to the cloud, and they would be like kind of a competition within the market, and they would lose share, and they would become like stranded assets. And at the time, I was like, this doesn't, it just didn't really hold water for me, because I think these assets are kind of, these data center assets, they're fundamentally just warehouses that hold servers, and there's fungibility there, and these were great assets. And just because there was migration to the cloud doesn't mean that you don't still need this real estate footprint, right? And I think that short thesis has really evaporated, right? And we highlighted this when we wrote that memo, which kind of leveraging off of comments that Jensen Huang was making. This was a year ago on NVIDIA call, saying, look, the data centers are booming, AI is booming, you guys don't understand. And then I'm looking at the market selling off Digital Realty, because apparently data centers are bad, right? So the short sellers—
Jim got that wrong.
They got it all wrong. And and it's a good lesson, by the way. A lot of these short sellers often misdiagnose or get that kind of micro analysis completely wrong. I've seen it so many times. So don't be fooled by them when they pronounce their doom and gloom scenarios. But no, what's happening now is there's just robust demand for data. There's a scramble to get access to data centers of any kind. Digital Realty has the best footprint in the world. They have over 300 data centers. So there's there's a short squeeze. Prices are going up. And what's really interesting about that one is because there was price deflation over the preceding 5 years, a lot of those leases, they're burning off at low levels and getting repriced at high levels. So there's just a lot of inevitable embedded growth in Digital Realty, but the stock is still lower than it was at the end of 21. So, to me, I'm looking for opportunities to benefit from AI, benefit from that boom, the boom in data centers, but not necessarily taking as much valuation risk as you would if you buy NVIDIA. NVIDIA might do extremely well, but it's got a big multiple. And some of the other Mag 7 stocks, they're very fully valued with big multiples, lots of growth, but they're high beta stocks and things could go wrong. So there's a lot of different ways to play it. And that's to the extent we're looking at AI opportunities, we're trying to find those where
the ones that are a little less obvious, that aren't necessarily screaming. By the way, you can get them in the S&P 500. So
yeah,
with Mag 7, et cetera. So I think that's actually kind of unique and special and important for people to think about as they diversify their portfolios and they look for, okay, where else can I be to play maybe this tech rally, but in a safer, dare I say, I mean, because nothing's foolproof, right? But in a safer sort of scenario. I mean, it's a big part of my investing style because I just need to be able to sleep at night. I really do. Like I can think back to Lehman Brothers and that going up in smoke. And listen, I was reporting on it in real time, but it was actually very, very stressful for me because I'm thinking, yeah, and you hear a lot. You hear a lot as a journalist. I had been quite concerned about all the things that led to what eventually was Lehman for quite some time. I even remember, I've got a great story about trying to get my network to do a sort of 2-minute piece on House of Cards. And this would have been as far back as probably a year before things really, really started going south. And the network kept resisting. They finally wound up putting it on the weekend evening news. But they were like, what are you talking about? Like the market's at an all-time high. How can you be saying that this is a house of cards ready to fall? But I had been talking to enough people and was that concerned about some of the things that were embedded in those in those loans that had been so traded. And this diversification of risk, this idea, Rob, at the time that you were going to diversify risk. Okay, but what if, this was my what if you do get that black swan event and that perfect storm, and then that diversification of risk comes back to bite you in the you-know-what, which is exactly what happened. And so I guess my approach, or what I like to do, is say, okay, what is my risk tolerance? How much can I afford to just throw out the window? Like, I don't care. And then how much, do I want to really try and allocate for companies that I know are good companies, strong companies that may have their ups and downs, but over time are really going to be pillars of strength. And I think you just have to kind of come to terms, if you would, with your own risk tolerance. I think it's one of the reasons why, as we started, right, I certainly encouraged you, and you have a background in this anyway, finding those opportunities that were more on the secure front.
Yep. And, look, there's more to the market than just AI, right? I mean, I think that AI is the big focus, and that's what's been driving returns, but there's a lot of other ways to make money out there. It's a very dynamic economy. There's a lot of, whether you're, we just highlighted an idea that's sort of that's very much linked to the AI theme, but there's plenty of other ideas, especially in our model portfolios where, these are good businesses that have their own stories that are, not necessarily directly related to AI, but nonetheless, and maybe some of those stories, as the market's so obsessed with AI related growth, like some of those stories are being neglected, right?
Exactly.
But good opportunities for.
No, and I see that, as a journalist, right? Because what does everybody want to talk about? NVIDIA. And that's just, it's the screaming headline, right? But if you go back and you look at what are the other opportunities out there, that's where you actually really can find value. And I think that's the goal here, like find the value and use that as your friend, and use us as your friend. As we were just saying, if nothing else, make sure you do try and go and read the piece on digital realty. You can get that for free at 76research.com, or go over to 76report.com, type in code word $. So it's $1 a month for the first couple of months, and then it goes to $9.95. So believe me, it's worth it, because you're going to get information and expertise and ideas that you just simply don't get anywhere else. I mean, I very confidently say this. I'm very proud of what we have been able to do here and our ability to reach so many people. So, use it to your advantage however you can.